Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, February 1st, 4:56 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend, and as long as we don't blow up tomorrow after the big three, Amazon, Apple, and Google report after hours, we'll be taking this with caution off of the market state after today's result and the rally of the market and surviving the Fed raising 25 basis points, the kind of hawkish statement, and the mixed Powell Q&A. So, like I said, unless sometimes we've seen it several times that we rally in the afternoon on the Fed and then give it up the next day. As far as giving it up the next day after hours, if the reaction to Meta is any indication, that's just not going to happen. Meta up 27 bucks, almost approaching high teens percent, as they basically had everything that could go right did go right on their quarter, and a big buyback in stock too. Market loves that. So let's check the trend gauge over here. Leaders bullish, uptrend, and then the three time frames that we track, the five major indexes on short-term 21-day and medium-term 50-day, all in an uptrend there. Long-term, all five indexes are above the 21-day moving average. We continue to trend higher. We'll turn the slopes of the lines on all the indexes of the 200-day higher, and then this will be a nice, beautiful green arrow that we'll get to look at, and that means we're full bull, and we want to get as much money into the market at as low risk entry points as we possibly can. So what happened today? As I said, 25 basis point raise, rally on Powell Q&A. We tried to sell off twice. We sold off immediately after the announcement came out. We sold off during Powell's opening statement, and then we just rallied really hard during the Q&A. Late in the day, some profit taking. Here are the numbers on the day. The G6, this is our growth proxy of ETFs, up 2.1%. S&P up 1.05%, was up as much as 1.5. NASDAQ 100 up 2.1. Dow just barely positive. There's no other way to put it. The Dow's sucking these days. Mid caps up 1.6%. Russell 2000 small caps up 1.5%. Global diversified 60/40 stock and bond up 0.78%. In-house GROTECTION. We cut some risk going into the presser. Discretion being the better part of valor, and we lagged because of that. We added some back afterwards, up on the day, but not as much as the S&P, not quite as much as 60/40, but we're pretty happy with the way we're positioned in the individual names going forward, and we'll be continuing to look to add to them at proper low risk entry points. So let's get right into what we do here at Revere, then the tail of the tape, and then a review of our focus list. Here's the S&P 500. Let's take a look at a 5-minute chart here. This best explains what's going on. Really nothing going on. Type range here, chopping up, chopping down between 40-50 support and the high 40-76-ish. Until here's the presser coming out right at 2 o'clock. So immediately down, up, down, chopping around. Tried to make a run higher. This was when Jerome came on right at 2:30 and tried to sell off there. Made a low of the day, 40.37, corresponds with yesterday's low, 40.37. And also a couple of revisits to the 40-30 area 2 days ago, and then we just took off like a shot. This one 5-minute candle up 0.8%, and basically we set lows of the day and highs of the day within 5 minutes, and then continued to squeeze higher all the way up to 40.49. This is our next area of resistance when I update the tail of the tape for tomorrow. Today's high, and then a pullback of 30 points into the close. But after market, we're up, but not up as far as the high on the day, that 413.67 on the SPY. So we'll need some continued cooperation from Meta and tomorrow with the rest of the big S&P stocks. And all in all, you can't argue about this reaction as long as overnight institutions stick to the initial reaction, don't do a big sell off, which this really makes today's lows, considering that we spiked down twice trying to sell off. Today's lows and really this week's lows at 40.15 critical to hold, and 4,007 is the level that we've been talking about for a while. So 40.15 the low this week, 4,007 the key fib that we want to hold. So there's your S&P 500. Let's go back to the daily chart here. You can see here was the recent resistance, 4,100. We hit it twice, once back in late November, once back in early December. Put in this base, pulled back. Market tried to shake 3 times, as I detailed in last night's video, every time resolving with a higher high, and that includes today too. This most recent high was back in September at 41.20. And that's where we closed today. So we ran above that and pulled back to it. So this 41.20 providing a little bit of support right here. The most recent, this was a rally before we kicked in on the last part of the third leg down. And those are the levels we'll be watching for tomorrow. So there's your S&P 500. Let's go to the NASDAQ 100. It's been leading. It's still leading. Look at the relative strength line over the last 4 weeks on it, above this 300 level, above recent highs back in November and December, not quite to the September 12th high of 311. So that's the next level we'll be setting our sights on, and today's high 303.43. Dow Jones Industrial Average, an index is only as good as the strength of its components, and there's some real lagging going on the Dow right now and some high price stocks, and that's what dictates the index, how the index is going to do, because it is a price weighted index as opposed to a market cap weighted index like the NASDAQ 100 and the S&P 500. Held the 50 and the 21 on the pullback, but just flat on the day. At the highs of the day, it was up about 0.5%. It just continues to lag. Our thesis coming into the beginning of the year is that we expected dividend stocks and the Dow to outperform. By midway through the first week, it was evident that that wasn't going to happen. We got off of those and pivoted. Okay to be wrong, not okay to stay wrong. And the Dow's just lagging right now. That's just the way it is. Tech is leading, growth is leading. The Dow is a defensive index. MDY, higher highs, clearing August and September, clearing June. Good stuff here from arguably the leading index as far as making recent highs go. Not recently, the NASDAQ 100 is the leading index, but relative to highs 6 months ago, mid caps looking fantastic. IWM, small caps, we trimmed our position in this today to book the profits and cut risk going into the announcement. Our beta was up to about 1.2. That was just a little more than I wanted it to be. We cut it back down to right below 1. We'll be looking to put this back on at an opportune time. IWM looking great. Can't argue with that. How about the VIX? VIX is too low. We're due for a volatility event, right? Well, that volatility event has taken place to the downside into the declining 21 again, lower lows on the VIX under 18. I'm showing it closed at 1787. This is showing 1814. Down 6.5%. My other scorecard shows it down 7.9%. The VIX is agreeing with the market. VIX comes down when the market goes higher. Next up is the dollar. Let's look at the 5-minute chart here, and you'll see all you need to know about the dollar. Initial spike up. This corresponded with a market spike down. Another spike up. This corresponded with the second market spike down, and then a free fall for the dollar. You dropped 0.5% in 10 minutes. That's a huge move down for the dollar. Consolidated a little bit, bounced into the close, corresponding with the pullback in the market. But this is a breakdown to lower lows on the dollar. This is a tailwind to stocks, plain and simple. We're all the way back to May levels in the dollar, ran from 27 up to 30.76, and now back again to 2025, breaking recent lows. This declining 21 day has held the trend going back to the beginning of November. Let's move on to bonds. Not a whole lot of movement early, but prices spiked late. Price up means yields down. Here's the BND broad index up 0.4%. Corporate bonds up 0.7%. You know, that's a good move for corporate bonds. The market is just not believing that corporations are going to take it on the chin the way this recession has initially been forecast. Let's go to JNK, junk bonds, up 0.4%. And finally, the TLT long term, up 0.9%, still below the declining 200-day moving average. Let's go to yields. You know, if the price is up, the yields are going to be down 3% here on the 30-year bond, not making new lows, but the yield continues to ride down the 21 and the 50-day moving average. Let's go to the 10-year. Yields lower, down 3.74%. Market not believing that the Fed says they want to raise rates by 25 basis points 2 more times. That's still what they're targeting. They raised 25 today, and we'll see. Powell hasn't done anything during this period out of sync with what the market has been expecting. There was a 99% chance that they would go up 25 basis points. And that's what they stuck with. And the reaction to his press conference, as of now, barring evidence to the contrary, was very bullish for stocks. After hours were continuing higher on the indexes on the back of good earnings from Meta. That's ad based, so anything that draws on revenue from ads, primarily Google, who's reporting tomorrow. The expectations are probably not as bad for Google right now after that response. Let's go to gold. As the dollar collapsed, gold and gold stocks took off to the upside, up 1.3% on GLD, SLV, 1.15%, GDX. We tripled our position in GDX when the dollar started breaking down. Good low risk entry off the 21 when it got back above the 80 MA. We took it up from 2% to 6%. This looks like it wants to go higher, and we've got a beautiful, simple, obvious stop out point. Should not break below yesterday's lows. If it does, that's corresponding with strength in the dollar, and right now the dollar's breaking down, so these both would have to do a complete about face to change the trend. Let's check Bitcoin, just because so many people worry about it, up 1% on Bitcoin, still hanging in this tight range over the last week and a half. So those are the major indexes that we track. Let's go to the tail of the tape now. Uptrend with caution. We'll see if this can go away by the end of the week. VIX dropping, as I said, 7.9%. All the stochastics are favorable. If they're pointing up in what we want it to be pointing up, it's a green up arrow. If it's pointing down in what we want it to be pointing down, that's a tailwind for the market. Then it's a down arrow with green. Still operating on the bull case. On the bear case, the last bastion was to watch the 2-1 FOMC reaction. I just detailed what's going on with there, so we'll see how we close the week. Prior to the market, ADP jobs report was below expectations. That's technically means that we didn't add as many jobs as we wanted to, but the JOLTS openings were up. That's negative if you're trying to tame, if you're looking for weakness in unemployment to get the Fed to stop, that's a negative. And then disinflation was a word that I hadn't heard come out of Jay Powell's mouth. We heard it several times today during the Q&A, and the market seemed to celebrate every time he said it. Day count from up 1 to up 2. Now 9 sessions above the 8 EMA and 21 EMA, 18 days since we had the follow-through day on 1/6. My expectations coming today were positive from a trend standpoint as long as we're above 4,007, neutral depending on what would happen at the FOMC. We had the usual shake and bake and then resolved higher, taking out the last resistance levels that I have listed here on the S&P and the NASDAQ 100. Here's the action. We pretty much already talked about that. Sectors up on the day, 10 out of 11 positive, only oil's down. Led by China stocks, K and XLK and XLY. Those are primarily tech. KBE banks, XRT retail, IYT transports, semiconductors and software on the downside, bond yields, the dollar, and oils. Here's our focus list. Uh, Lots of changes in the portfolio today. So coming in right out of the gate, we bought DT. Uh, Gap up on volume, breaking out of a first stage base, took a small position in that. And then going into the presser, AI was so extended that I just booked the 20% profit. It's so many ATRs above its moving averages that, I mean, the odds were it was going to pull back. It did pull back, but then it took off higher. Uh, we don't have a crystal ball here. We just weigh the odds and make the decisions based on our rules. Took off TNA, that was the small caps to reduce risk, and trimmed SSO. So that took our beta from about 1.2 down to uh, just below 1. We also added Boeing early. That's what got the beta up to 1.2. Boeing tried to break out early. Let's take a look at this. Tried to break out early. We'll go to the 5-minute chart here. And with big volume, this got us to take the position up from a 6% to an 8%, and it immediately reversed course, went sideways, and frankly underperformed versus the market during the market shooting higher and then selling off. Mildly disappointing for Boeing. You know, when we buy something, we want it to perform twice what the S&P is doing. We can easily get twice the S&P by buying SSO. We're not quite getting that out of Boeing right now, but we're positive on all of our buys except for this last one. And as always, we go into every day wondering if what we own is a mistake, weighing the odds versus other opportunities. There is opportunity cost if you stick with something that you could be putting into something else, and we try to balance that with the required patience to maximize the gain. So we added to Boeing. I already talked about adding to GDX, and we added to Bros afterwards. So this took our beta from high at 1.2 down to 0.95, back up to 1.03 by the end of the day. So 3% more risk than the S&P 500. The bottom line, Fed raises 25 basis points, market rallies during the Powell presser, and the market action, if you're bearish, you're arguing with the market action. That's just telling it like it is. That's what we do here at Revere. So let's get to the charts now, and we'll start off with the 3 ETFs we own: XBI, Biotech. Good day today. Up 0.94%, lagged a little bit early, came on at the end, up slightly less than the indexes. Very good setup here, though we need to see some relative strength kicked in. This has basically just been going in line with what the S&P is doing, and as you know, we want 2 times the S&P, ideally, on everything that we own. Next up, GDX, already talked about that. We tripled that position up off the 21. OIH, down ugly today at one point, but bounced perfectly off the 21 day. Still down on the day, but in the upper part of its range and back above the 80 EMA. Now to individual positions. We already mentioned Boeing. First Solar, up 1.44% on the day, near recent highs. Shopify, 2%. Big liquid stock continues to be bought. Great volume patterns, looking to increase our exposure to this one. Tesla really took off after the Fed making new highs after its earnings announcement. We're undersized in this. Bros, we added to this after it bounced off the 200, lagged early, up 1% on the day, new recent highs. Let's see, AEHR, very much a laggard early, still closed down on the day, but look at that big undercut and reclaim of the ADMA. That's what you want to see in stocks. AI, we sold this and it made new highs after we sold it. But we took our 20% gain in 4 days. So we'll look to regroup that at a lower risk entry point. TMDX lagged early, undercut and reclaimed the 21 and the 8 by the end of day. And finally, DT, this is what we bought today. There's the gap up, 456% above average volume out of a stage one base. Let's look at the 5 minute. We saw it right away when it undercut here and then reclaimed the opening range is when we put it on, pulled back, never broke the lows of the day during the pullback, and then started to accelerate in the afternoon. So we're up on this position. A couple of other ones that are acting fantastic. The buy of the day should have been AMD. Uh, Volume wasn't as high as DT, but the action was fantastic. Gapped up, just continuing to trudge higher, all pullbacks bought, not much give back at all during the presser, closing near the highs of the day, up 12%. Big liquid leading stock that institutions can pile into. Semiconductors, an absolute leading group above the 200-day moving average. That looks fantastic. Mobileye, another semi stock, making higher highs after earnings. Nvidia, another semi stock, making recent higher highs, bouncing off the ADMA, absolutely being accumulated. Another one of those big stocks that I'm talking about, the institutions love to pile into. Think about it. If you're a portfolio manager and your benchmark is contained by a bunch of big stocks that are going higher and their weights are heavy in the index and you're not participating, you're going to be lagging the index. So that leads you to chase them, whether or not you think that it's the right thing to do. The market is telling you what you need to do, and you best not argue with it. Here's ON, another semiconductor company, up 6% on the day, and after hours Meta, weekly. Let's get an after hours quote on this if we can. Up 18.75% at 180, so all the way up here, clearing all the moving averages. Man, Meta. So it's basically doubled off the lows now, almost doubled off the lows. Zuckerberg delivering the goods after suffering for quite a while off its highs. So basically, it went from 383 down to 88 and now back up to 182 on this earnings report. Another one that's poking me in the ribs, Elf got stopped out down here, and Elf is up 14% after hours because chicks need makeup. All right, I believe that's going to wrap it. As always, love to hear from you. I'm going to put it up just because this is why we protect the downside. Because when you're going into retirement, you do not want to get hit with a negative sequence of returns that devastates your nest egg. The market is doing its best to put last year's bear market in the rearview mirror. We're compounding capital from a much higher capital base because our maximum loss was a little over 12% last year, and we'll be back at new highs before the market will be. If you're interested in this approach, email me, don@revereasset.com, or my partner, Dan Stewart, dan@revereasset.com, or phone 855-REAL-WEALTH. That's 855-732-5932. As I'm fond of saying, it's not how much you make, it's how much you can keep. We protected the capital very well compared to the market, and now we're prepared to participate in the upside. Our rules got us out, our rules are getting us back in, and now it's just a matter of getting the leading stocks and the leading sectors at low risk entry points and riding that wave as long as it will go. Stops always in place if the market reverses, and that's going to wrap it. So finishing up, Fed Day, FOMC Day, February 1st. This is Don Vandenbord with Revere Asset, telling it like it is. Nothing but the facts here at Revere. Thanks for listening and have a great day.